know the rules.
Yes. All right. Thank you, everybody, for joining us for this month's Blueprints for Business, sponsored by Forwardly. Thank you very much, Jane. Appreciate that greatly. This month, we are going to be talking about year-end tips and tricks, kind of best tactics or ideas of how to simplify the year-end close of books. But before we get started, Richard, how are you doing today?
Doing fantastic. You would, with all the fires, you would think it's mayhem out there, but it's a gorgeous day here in Palm Springs. Definitely keeping a watch out for all my friends and colleagues that are in LA, and hoping nothing but good things for them. How about you,
Absolutely.
Matthew? How are you doing?
Doing awesome. Fortunately, I'm far enough north this time, so we're not in the impact zone at the moment. But like you're saying, all of our friends are at the different area. It's always difficult. So we hope that this thing gets under control very, very quickly. And Jane, again, thank you to Fordley for sponsoring these shows. Truly appreciate it. Brand new year. Wanted to give you a quick chance. What is the latest, greatest, newest releases with Fordley for 2025?
Yeah, hi, thanks, Matthew. So this year we're really working on just smoothing out everything from last year. So we're working on a couple of features for the next couple of months, but right now it's really about auto payments. We're highly focusing on getting that module like really up and running so that when you send a payment request to your client and they want to pay you regularly for every invoice, you can just make it super, super smooth for them to get signed up. And that's been our big priority. So we're making tons of little changes and improvements as we get feedback from it. And so far it's going really well. So we've been getting really nice messages the last couple of weeks. Actually, it's been improving my mood a lot to see so much positivity.
That's always a good thing.
Yeah.
And we've got two great guest hosts with us this month. We've got Alicia Katz Pollock and Diamond that are both pros of their own area, and thought they'd be great to help start off our conversation on the best kind of tips and tricks and areas to kind of focus on, getting the year started. Would love to, Alicia, why don't you start off and introduce yourself, and then we'll go over to Diamond as well.
Okay, well, Diamond and I are actually going to introduce each other. So Diamond and I both live in Portland, Oregon. In fact, we live a couple miles away from each other. So she's one of my besties and fun people in the world. And so the biggest thing going on in Diamond's world right now is 1099s, and she has put together this absolutely amazing resource called 1099problems.io that we are going to talk about at length, I'm sure, during all of this. But beyond that particular project, she's a fractional fractional CFO. She's a business coach. She founded the Portland Woodard group when we had one and was absolutely instrumental in keeping that community up and running for a really long time. She is the brains behind the Realize community from Jason's Stats. She's the one who actually manages all of the community platform. So kudos to her for that. She also does a lot of improv comedy and helps all of us leverage improv comedy in order to help us with our communications, both within our company culture and with our clients as well. Because like when you're loose and comfortable, then it's a lot easier to articulate what it is that you want to say. And then as far as being a specific gift to Royalwise, we call our platform the Royalwise Owls, and OWLS stands for On-Demand Web-Based Learning Solutions. Guess who came up with that? It wasn't me. It was her. So that was Diamond's acronym, who actually named the whole Royalwise Owls platform. Now, we already had the Owls logo, but she's the one who said Owls stands for something. And now that's what it stands for. So thank you, Diamond, for your friendship and camaraderie through all the years.
Oh, it's my absolute pleasure. And the OWLS acronym just came to me one day, and I was like, that belongs to Alicia. I need to tell her right away. And I'm so glad that you embraced it because I love puns, and I know you love puns. You're so clever. You're so good at puns. Everybody, this is Alicia Katz Pollock. If I don't know anyone in the world that doesn't already know the GOAT, Alicia Katz Pollock here. But for those of you who don't know, this brilliant human breathes, eats, sleeps, lives, and emanates QuickBooks Online, a myriad of software programs. She's brilliant. She was named the Appologist of the Year, one of the top 10 categories for Intuit's Pro Advisor of the Year contest. She's a published author. She's written several books. She's got a mammoth book out right now with an accompanying training. She calls it the HOT training because it stands for hands-on training. Oh, yep, Ken's got it right there, the QuickBooks Online book. Oh man, just any sort of tip or trick or hidey hole that exists in QuickBooks Online, Alicia knows all about it and can explain it to you in a way that you can understand. So her training platform is tops in class. Everything you ever wanted to know is in there. If I ever wanted to do QuickBooks Online training, which I don't, because Alicia does it all for me. She gave me an affiliate link. It's great. Anybody that has questions about QuickBooks Online, I just send them to her university, her online university of classes. And folks come out of their masters in their own right. Alicia's generous beyond measure. She actually came up with the little graphic that I use on the 1099 problems homepage. She put all these little clever Easter eggs into the 1099 NEC form, and it was so clever. She's in every training platform that you can imagine because she just knows every little thing about QuickBooks and how to make it work. She just did a 1099 class actually last week that was phenomenal. So all the little new nuances in QuickBooks Online, the little 1099 wizard, all those changes that you see that are different from last year, she's got the breakdown on how to get around all of those, how to get around the 1099 mapping, has the full skinny on the new QuickBooks Online paid offering for 1099 filing and everything in between. So y'all, I'm just so honored that I get to do this webinar with Alicia. Oh my gosh, I'm so excited to pair up with you.
Yeah, she's pretty fancy. She's also got the Unofficial QuickBooks Podcast, which is pretty dope as well. But I need to do a quick little shout out to Ken there because Ken, you are the master of swag that just kept pulling things like that of Alicia's to share immediately between the owl, the book, and all that stuff. So that's pretty cool. Congrats.
Her other book's right behind me.
Yep. So to get us started, though, I wanted to ask everybody, love those owls as well. What is everybody's least favorite thing that we have to deal with at the beginning of the year? Who has something they really just don't like? 1099s is a big one for me, but who else has got something?
Getting
clients.
Sorry.
Getting clients to understand the critical importance of the compliance for the things we find in January for the prior year. 1099, W-2, general overall books, whatever it is, like trying to get them to understand like why we're not just being nitpicky for the sake of being jerks. Like we care about you. We want to avoid problems. And you didn't tell me about these things, so now we have to deal with it after the fact.
How many people has at least one client surprised them with a new account they didn't tell us about all year? If you did, either raise your hand, put a 1 in the chat for people that are, watching live. I'm keeping an eye on the different social channels as well. I had 2 different ones that gave me some real zingers, which were fun. Anybody else? So And I think, Ken, did I hear you start to speak up on something else? I know we've got some comments. Other people were saying that shareholder health insurance booked to payroll is an absolute pain in the rear. Agree with that one. That's a really big pain in the rear. Getting the documents. It's like you'd think if we'd been doing it all year long, they'd realize why we need it, right? And yeah. And do you want Chrissy asked if I want a one for every account I found. No, we probably don't have enough room in the chat for that, but you know, we get the point across, of course.
My favorite is always hearing all of the reasons that people don't need to send a W-9.
Yes.
Okay.
No? Okay.
Well, so that's an interesting, like, what's one of the examples, maybe, Richard, that you've heard with that?
Oh, I'll give you one from my real life books, and it was about 3 years ago. I did a photography shoot, and I'm kind of religious about getting a W-9 prior to any first payment. And for whatever reason, we were running late. He insisted I sign his paperwork, and then we run off to the shoot. And I had said, I need to get your W-9. I completely forgot. And it never registered. And so in January, of course, he's like, what? I'm doing that off the books. I'm like, that's not a thing. We're not doing that. And he just simply refused. He's like, I'm not giving you a W-9. So that was fun.
Okay, this is too good to not share. We have a client who drains their checking account at the end of the year every year so they don't show a net profit. And they do it every single year. I've definitely
Don't think too hard about it. 'Cause you'll just...
Yeah. So
Similar for barter and trade, right? No payment, no 1099, right?
Yes.
But it's
Yes.
constructive receipt. Fun.
So Alicia, this kind of is a good time to where I know you've got a couple top areas you like to share when you're educating people on what they should focus on to find the bigger challenges quickly. What are your best tips that you have when it comes to, you know, closing things out quickly and easily?
Sure. I mean, I spend a lot of my time at this time of year is spent reviewing people's books. Like I have a bookkeeping practice, but my bookkeeping is like micro clients. More, I'm in the consultant range. And so I have probably a couple hundred people that ask me at this time of year to make sure that their files are buttoned up for taxes. And a lot of those are small businesses, but I actually perform the service for bookkeepers as well. And so I have this list of the hidey holes. Somebody used that word earlier, but that's actually the word that I use. All the hidey holes where I go to look for bad data. Like if there's gonna be a problem, this is where I go to identify it. And so I have like a list of like 10 places that I can tell there's going to be a problem. And I don't know if you want me to rattle them off or how you want to approach this. It's actually on the 22nd, I'm doing a full 2-hour class where I go into depth about like showing you in QuickBooks, like here's what it looks like and here's how to fix it. So, you know, like, you know,
If you want to go through
I
some
want
of
to
them,
demo everything and it's hard to do this without demoing.
well, you can do some of it demo however you would like, but definitely if you can put a link to the class that you're going to be doing, and then I will push it out to the other social channels as well to
Okay.
make sure everybody can see the stuff.
We appreciate that.
Because again, we all know you as an absolutely trusted trainer and educator for all. So,
Yeah. So, like, do you want me to list them, talk about them? How should we?
Yeah, I'd love to hear him.
let's hear them.
Okay. All right. So, basically, the very first place that I go is their AR aging summary and their AP aging summary, because we see people who will write a bill but then run an expense that doesn't pay the bill. And so they'll look at that, the owner will look at the list and go, I don't owe anybody any money. And it's like, okay, now we got to go hunt down these payments and get them applied. So that's one of the first places that we look, and especially the AR aging summary, because the same deal, you'll get payments that weren't applied to the invoice. So you'll see a positive number and a negative number, or even worse, you'll see a zero. if you see a 0 on either the AR or AP aging summary, that means that you have the payment and you have the original transaction, but the payment wasn't applied and the check mark wasn't checked off. And all you have to do is open the payment, check the invoice or check the bill, and it'll just disappear.
So I want to stress with what you were just saying there, in case others who are listening maybe didn't capture the power of what you just mentioned. When you show up a 0 on a report, the only time the zeros show up is because activity happened in something that's there. So you can still have the 0 balance. So what you're saying is, if you see that 0, you know some activity happened that isn't quite right, and that's what you're saying to suggest it those, right?
Yeah, exactly. Now, if it's on like a P&L or a balance sheet, that might just mean that money came in and money came out and it was handled appropriately. But if it's on an AR and AP aging summary, it means your reports are showing open bills and open invoices, even though they're not open.
And how does that work with journal entries as well, to the way that tags in?
With journal entries, especially if you've got integrations that are loading in the journal entries, it'll come in and out, but QBO requires a payment to join the two of them together. And so I see that a lot with companies that have integrations with like e-commerce imports, or Chamber of Commerce imports are famous for this one, where you look at it and it doesn't show any AR at all, but you see this giant list of open invoices, but they're not invoices, they're journal entries to accounts receivable. And that's you totally nailed it, that what you have to do is go to every single customer and create a payment, and then it will show the original journal entry and the counter and the contra entry, and then you have to tie them together using a payment.
Now, it'd be inappropriate if I didn't mention right now, this is a perfect reason to use Forwardly, so you don't have to have these kind of problems, right? So,
and I'm actually going to piggyback on that, because I just started using Forwardly myself, and I've sent 3 payments through it so far, and my experience has been excellent. So thank you, Jane.
We've got Misty watching us also on Facebook, and she's saying she hates AR the negative. She's like, I need help, Alicia. So she'll probably reach out to you as well. It's good to see you, Misty. Ashish, good to see you on LinkedIn as well. So what's number 2?
Okay. So once you have been through AR and AP, and now the owner knows that they have to go collect a bunch of money that they're leaving on the table, the next thing that I do is take a look at undeposited funds. And we all know what's happening in undeposited funds. If your workflow is done well, every payment that's made from a customer goes to undeposited funds, and then it matches the bank feed. But what your clients do is they take their sticky little fingers and they see a deposit come in, and they categorize that deposit that I got this from this customer for this service, and then they've duplicated the revenue, and the payment is still sitting in undeposited funds. And
I was going to ask everybody that's here, how do you guys get around that throughout the year? Do you have any best practices of how to, Deborah, go for it.
Every month when I'm doing month-end reconciliations, I go into that account and I mark it and say, show me what's unreconciled. If it hasn't been reconciled, then I know that there's some payments outstanding. So I just go through it every single month and verify that everything that came through actually pulled through correctly.
Yeah, that's a great way. Obviously, that's the whole reason we have to do the reconciliations, is it's how you find any duplication or missing things or unclarified things as well. Carl, your record was a negative 2 to 3 million.
Wow.
Wow.
That's a lot.
That's Sam Altman's books. What, too soon? Too soon?
Well played, though. Well played. Okay, so it's number 3 then.
Okay. And so, by the way, just in my course, I actually show you 2 different ways of solving that problem. All right. So then the third one is reconciling all the liability accounts.
Okay.
A lot of people will first of all, just with reconciliation, a lot of people think reconciling means checking off what is on the bank statement, but we all know that there's phase 2 of reconciling where you actually look at and address everything that isn't on the statement. But that has to be done for not just your checking and savings accounts and credit cards and loans, but it has to be done for your payroll liabilities, your sales tax liabilities, your due to from accounts, pretty much everything. The only thing that really I don't do is fixed assets, because I'm just leaving that to the CPA for their accumulated depreciation. But I go through all the payroll accounts, and I do a $0 reconciliation where I grab everything but exclude the current month or the current quarter, wherever the missing payment is, and it should just equal 0. And what I very frequently find are checks that were written for taxes that went to the liability account instead of an expense account. And those just sit on the balance sheet literally forever if you don't find them and reconcile them.
I've always seen an issue. I don't know if anybody else has had this as well, but when you're trying to deal with your payroll liabilities and health insurance, since health insurance is always paid at the beginning of the month for the actual insurance that month, it becomes frustrating if you try to run as a liability that way all the time. It almost never balances out, because if an employee leaves halfway through the month and you can't collect the extra portion of it and all these different things, I'm seeing people nodding their heads. So I'm not the only one that, beats their head against the computer when this occurs, right? You guys, what's your best fix for this? Any suggestions?
Mine is just to document it. Like Alicia was saying, is reconciling doesn't mean 0.
Yeah.
It's understanding, okay, this is why we have this balance, and not just letting it be, oh, that must be this. No, it's like, okay, this balance is what we will get a credit on the next month premium bill. And and then if it's a negative for tax prep, I would do a reversing entry to move it up to other current assets. So
okay.
Where it gets really fun is, let's say it's your monthly insurance payment, but then your payroll is on every other week, so you've got 26 pay periods. And so you have to take your monthly expense and multiply it times 12 and divide it by 26 to figure out what to put on payroll. And then you usually can't reconcile it until March, until it goes through its whole cycle. So
now what I do for those is I will actually, depending on the client sophistication, and I don't have high volume of this, so that's why I can do this, is I will put a calendar reminder for at the beginning of the year. I go in and I find the 3 payroll months, the 2 of them that will have 3 payrolls in the month, and I set a reminder to turn off benefit withdrawals and turn it back on after that payroll is run. So that way I can just divide by 24 and it's going to line up pretty much monthly. And so that makes it a lot easier for monthly reconciliation. It's the manual work, 4 times a year. But I've found that the ROI on having clean month clarity, if there was something else muddying it up, is it's way worth it to go manually adjust benefits 4 times a year.
So one of the ways I've learned to do it, and I'm hearing from everybody else, they do it quite differently, specifically with health insurance situations, again, where you're paying for the health insurance that's going to be that month that's coming up, right? So it's never behind, is the thing I'm trying to get across, is if you record the entire expense to your healthcare expense and then have a sub account that's your contra account that reduces by the employee contribution, then you actually always know the amount that's the remainder is truly the expense to the company. And I go back to that same idea again of, if you had an employee leave halfway through, or you had to pay extra for somebody, anything of that nature, it's capturing all of it. It's just the parts from the checks that are being held back. That's the contribution, which reduces it. And Chris, you look like you've got some great insights to add there, right? Yep. Yeah, I thought you were getting ready to say something. So does that work, or am I wrong? Because I'm not a CPA and I don't want to give.
That works. I think it depends too on I mean, accrual books are accrual books, right? But if you're like coming in to do a cleanup, like I'll book them throughout the year. And as long as I've got 12 of them and I've accrued correctly at year end, like that's kind of the shortcut way. It's not 100% proper accounting, but sometimes clients aren't paying you to do like every single little precise thing the way that GAAP tells you to. So
Yeah, it's a good point.
And then you get the 4 cent.
Sorry.
And then you get the 4 cent rounding error at the end of the.
Yes. Yeah.
We've got a question in the chat that I wanna call out. It's from Jeff Weathers. What do you do when you have a loan and have their paperwork, but I would have to rig this liability to make it match their statement?
Why?
So I get the paperwork from the loan people,
Yeah.
and nothing matches up. I know about the interest and the principal, and it just doesn't match up. So do I just make it?
My guess would be you'd want to look at the initial entry of when the loan was first generated and how that was created. There's probably an error there to where, because depending on the type of loan, like if it's one of those credit card loans where you're paying every single day out of your merchant processing, those ones, they tack on a closing fee right at the beginning. They tack on the amount, whether you pay it early or not, the interest is the exact same amount. So you're going to have the amount of money funded to your account plus the closing fees plus the interest ends up being the total liability of the entire loan. And then every month or every day when those payments are going through, you have to do an adjusting entry to which should correlate correctly to break out what was actually interest expense of those payments versus the actual loan amount. But then this could be different versus a vehicle or something else. Alicia, you want to add on?
One of the things that I've really noticed is the difference in the trends from loans from fintech companies versus traditional bank loans, where you really need the starting document because they tag on their administration fees and they front load the interest as a finance charge. And then the actual payments don't get a principal interest split. So it's like a different kind of loan. And so I frequently find what's missing was the original loan documentation.
And that's and exactly, but I just don't have that information, but it's not off by much. So should I just like make it work?
If it's not material, bank fees is usually the way that I put it, or if you have something more specific to loan fees, but
Okay.
that's what I'll plug with.
How old is the loan?
Just a few years old, but it's just really hard to get all the documents.
So you're going to want to look at the prior tax return to see what was listed on the last tax return of what the balances were, what the interest expense was, and use that as another touch point to try to figure out the right number. Because, again, sometimes people don't pay for perfect GAAP books, but when you stuff numbers, stuff comes back later on is the hard part.
Stuff the best way you can or should.
Yeah. I mean, put it into a bucket so you can find it. Jonathan, you had your hand up, I believe, right? You were going to say something?
Yeah, I was just, first thing is if the prior accountant wasn't reconciling it, that should be pointed out to your client. And if it's not material, then I would just write it off to interest expense, and just to get it lined up that way. But again, if it's a couple-year-old loan, this should have been matched every year. And the prior people just didn't do their job. And if it's significant, they may want to, refile.
Tori, you wanted to add on as well?
Hi. So I have a client that has several loans and makes late payments all the time. And what I ended up doing was for a couple of them creating Excel spreadsheets to track the monthly loan balance. So when I reconcile, I can go through and match it to what was last time. And then I can see where when she missed a payment, on the next bill, the principal and interest has changed for that month because it ends up accruing more interest. So the principal payment goes down. And then you can kind of reconcile
the late fees and the principal and interest differences. And that has been really helpful for me for the loans that she has a history of paying late.
Now, Diamond, doesn't this also come into the 1099 world also? Don't you get a 1099 or something like that for your loans and the interest part of it? You're going to get a statement, and how does that come into play?
So, I mean, typically when you get the year-end statement for the loan, right, it's going to give you at least the loan balance, right? So it might not break out the interest. They should be reporting, let's see, well, interest paid goes to so they would be reporting, you would not be reporting interest to them because they're the financial institution. So no 1099 interest, but they would responsibly tell you how much interest you paid them. But if they don't, you just make your balance sheet balance tie back to the statement balance and smush it to, that's the technical term, right? You smush it to interest, bank fees, probably not office supplies in this case. Never miscellaneous, never miscellaneous.
IRS, look at me, please. Account.
What about tying into the 1099 int form?
Is the bank giving the lender, or not the lender, is the bank giving the borrower the 1099?
I frequently get a 1099 INT form from my lenders.
For interest that you paid to them?
Yep.
Then you can tie out the interest expense that way. And if it doesn't balance out to principal, then you have this question mark and you use algebra to plug the missing expense, right, to what makes most reasonable sense, which would be bank fees in this case.
Yeah. Is the bank fees the algebra part?
The bank fees is the algebra part because what's left?
Okay. So,
what's left?
Christy, you actually had a really good comment that I was thinking about. I'd like to, you mentioned more about materiality, what that really means. Do you mind sharing that with everybody as well? Because it's
Sure. I mean, I put it in the chat for anyone who wants to like grab it. Feel free to steal it if it makes sense to do so for your business. But in general, you know, because we are outsourced accountants and we are not always being paid to do everything precisely, accuracy is more important than preciseness in what we do a lot of the times. I tend to just do a quick back of the napkin calculation on how much my change that I need to make is going to impact different things. So in general, if it's like less than 5% of pre-tax income, or it's 0.5 or 1% of total assets, 1% of equity, or 1% of total revenue. If it's underneath those thresholds, then I just don't worry about it. I don't waste any time on it. I just make the adjustment in a journal entry and move on. There's a couple of exceptions to that rule. Like I'm a big fan of making sure bank accounts and credit cards are reconciled to the penny, because your 4% difference could be $100,000 and $999,000 on either side of that, equation. But in general, that's kind of my back of the napkin approach to determining, is this material or not? If I need to make a change and it's going to be material, then I will do it the right way, but I might reach out to whoever the tax preparer is if I have some sort of working relationship with them, to let them determine, do you want me to spend the time to go back from the beginning of the year and fix this appropriately? Do you want me to just make an entry? Do you want me to just call it to your attention when I hand everything off to you, and let them make that call?
That's a good point. Thank you. Okay, so Alicia, I think we're up to that was 4 or 3 so far. So what's the next on your list?
There's 3. Okay, so the next one is using the reclassify tool in order to move transactions around. That it's one of my pet peeves when an accountant plugs and takes oh wait, these aren't meals and entertainment, I'm going to move those to owner draw. The problem with that is that that doesn't work for QuickBooks because the bank feed automations and the different automations are looking at what the categorization was in the past, and you will still have the same rules firing wrong, or the using the categorization history, and the client will keep repeating the same mistakes. And what a lot of people don't realize is the reclassify link, you can use it in any QBO file, it's just not on the menus. So while we have reclassify up in the briefcase in QBOA, you can take that after the qbo.intuit.com/app/ put in reclassify dash transaction, and then you can do it in any file. And then you can literally just pick things up and move them where they belong, and then in the software will continue doing it right in the future.
Did y'all hear that little hot tip right there from Aunt Alicia? Any file, any QuickBooks Online file, doesn't matter if you're logged in as QBO accountant, any file.
Yes. So if you are forced to log in as the user, you can still do it. Christy had put the link in. Oh, she fixed it. Okay, got it. So it's there for you.
I just real quickly, in case anybody has any clients that are watching this, please don't help us clients. Okay, that's not a tip for you guys to do. We don't want you touching that at all, please, at all.
No,
please.
we use special gloves.
Yes, and the audit log will tell us when you mess with stuff, and then we charge you for the audit fix. So don't do it. But okay, that is a good one though. Okay, so what's number next?
5. So the other thing that I do is I'll run my P&L report and my balance sheet split with columns for all the years. And then I'll do cross comparisons and look for spikes and dips. At this point, I pretty much leave out 2020, 2021, and I just let my eyes glaze right over them. So I'll go from like 2018, 2019, 2022, 23. And that allows me to see when something's been misclassified or when people have changed how they're doing things.
That's a good point.
And then that gives us a chance to either reclassify or talk about it. And I'll do this review with my client. I'll actually do the reclassify with my client where we'll go through and talk about where everything is. And then we look at this report because like taxes get mucked around. Like, is it really a business tax or is it their personal estimated tax that should be in equity? And so when I see that the tax numbers go, I know that it's being inconsistent from year to year.
I love that. Obviously, that works best on the profit and loss. It's not going to work on a balance sheet the same way since, we know the balance sheet kind of carries things along, except for when they should still be zeros. So.
What it does on the balance sheet, though, is it allows me to see if the CPA has not been going in and putting in the accumulated depreciation entries or zeroing out shareholder equity at the end of the year. And so if I see the same number just carrying along indefinitely, that's a sign that either there's missing entries or something's been misclassified in the past that's just living on indefinitely in the balance sheet. So I do it on the balance sheet too.
Which brings a good question because we had a good mix here of, tax professionals, all the different titles of accounting wise, right? How many people are doing the book to tax adjustment for their clients every year? So, it's a super, super important thing. It'd be phenomenal.
If we're not doing it, we're reconciling to it.
Okay. Nicole, you'd like to add, please?
Me?
Oh, you had your hand raised. Maybe you're just saying yes.
Oh, no.
Okay.
So yes, we do the book and tax reconciliation. My husband's the tax accountant. This is what he's starting his 43rd tax season.
Nice.
So he's a stickler about that. And it doesn't really take that long to do it. Most of the time you're just adjusting fixed assets. And then I have to do and your year-end accruals and stuff. But yeah, the book to tax is a big thing that you have to do. But I do have a question.
Yeah.
I fired 3 clients. Um, and I am so happy. I'm counting down to the 31st. But I met with the new accountant for one of the clients. And I am not a desktop user, QuickBooks Desktop. And he was asking how he can take Gusto and move it over to QuickBooks Desktop Payroll.
So who here is good with Gusto? Anybody? Who wants to answer the question? Anybody got it? Maybe John?
So there's a way to download an IIF file, I think, and you can do an import into QuickBooks Desktop from that.
Okay, thank you.
It's ugly. I have one client who does it. It's not fun, but it is possible.
I am just going to give him the file, and then that client is his problem.
You're still going to work with him, charge him more for that.
Yeah. Oh yeah, I should.
I was
'cause
going
he's
to say
like,
rebuild, just start over. I mean, it's not worth
yeah,
it.
because he also uses desktop. So that's why I'm like, I don't know how to go from online to desktop. But you got to reach out to Intuit for that.
I mean, the worst case scenario is really, it's just a journal entry that needs to be added in if you're not trying to create the individual checks inside of the books. So if you have a recorded journal entry that you can kind of repeat every single time, you get the right report, and then it becomes stuffing the right numbers off the report. That would work as well, and you wouldn't have to deal with an IIF necessarily, or mismapping or anything of that nature possibly.
Now,
Yeah.
because I have 2 clients on desktop, a QuickBooks Desktop that use Gusto. Is that your situation, Nicole?
Yeah, so the newer client, the new accountant uses QuickBooks Desktop and QuickBooks Desktop Payroll. I use QuickBooks Online and Gusto. So basically to me, he's going backwards.
So wait, okay, so the new accountant that's taking over wants to move all of the Gusto shice over into QuickBooks on payroll, desktop payroll. Is that what you're saying?
Yes.
Then that's his problem.
Oh yeah,
Give
tell
him
him
access to
no.
Gusto and tell him have a nice day.
Yeah,
Right.
that's what I was gonna do. I'm like, I don't know. I said, if you don't use some type of online software, I refuse to take you on going forward as a client.
Good boundaries. Yeah. Now I will say, like, if they were just on QuickBooks Desktop and wanted to continue using Gusto, you can get a process pretty dialed in. Like for my clients, I have to do the IIF file and put that into Gusto to have the right chart of accounts. So if anything changes with the chart of accounts, I have to handle that. But I've trained my clients for every payroll, they go hit export after they run payroll, downloads an IIF file, and I've trained them on how to import it into QuickBooks Desktop. And yeah, so it's extra steps, but it's doable. But I like your boundaries. Yeah.
And Nicole, you don't want that liability. If you do it wrong, you screw something up and bring in all that info over, then that client is going to be your worst nightmare and you'll never get rid of him.
Yeah.
Let the other guy deal with it. If that's his software stack, then he gets to mess with it.
Yeah, I'm gonna meet with them Monday, and I'm like, I do everything soup to nuts. I'm like, there is no, they don't do anything. I said, and don't give them access to the software. I said, because they have especially the son, he'll go in there and mess up everything. So
rewind, get rewind in place.
Yeah.
Yeah.
Okay. John, your hand is raised. I think it's because you were raising it to answer before, right? Just want to see if you, okay, didn't want to pass over you. So Alicia, what's your next one? We'll go a little bit quicker through these because I want to make sure we have plenty of time for Diamond to tell us about our 1099 problems too.
Yeah, I'm just going to actually just list out in a nutshell the last set of adjustments. So I've kind of given you like the places where I look for bad data, but the things that people forget to do, because I want to give Diamond all the rest of the time, is inventory adjustments. Making sure that they are doing an actual physical hand count, and the number that they're giving you is the cost, not the retail price. I've had more than one where I've had to go back and say, yeah, and they're like, well, just do the same monthly adjustments. Like, you're missing the point. We need an actual physical count. So that's one of them. Making sure that asset depreciation is in there. It may be on the taxes, but a lot of the time the CPA doesn't go back and put it in QuickBooks. So make sure that when you look at the balance sheet over time, it's not just level, that it's decreasing. Zeroing out the shareholder equity, making sure that's on a January 1st for owner draws and owner contributions. And I know not everybody does that, but I find it so helpful on my balance sheet to see what the accumulation is for the year.
Especially in partnerships where you have to have like equal amounts. If you're not doing it consistently, it can make it really difficult to figure out where those went askew. And that's a big deal during an audit, of course. So that's a good point.
Yeah. So that's just kind of like the wrap up and due diligence piece of it. So the first list was all of like, here's how to find the band stuff. And the second list, the last three are like things to don't forget to do.
Now, opening balance equity is okay to have balances in there all year, right?
Good. Thank you. I should actually add that to the list. Opening balance equity should be 0 as of the day that the file was originally set up. And that's a great place to also look for bad data, because what I'll find is clients will either add a bank account that should have been there all along that they forgot about, or they add in inventory and they don't set the date back and then purchase the inventory. They just say, I have 5 of these. And now all of a sudden you have opening balance equity that shouldn't be there because they had to have bought it sometime.
Yeah.
So thank you for bringing up OBE.
You know, just trying to make sure everybody was still awake in this fun conversation. So, okay. So obviously year end, this is all the stuff about closing out the books, but we still have the other joys to handle during January. One is all of the payroll, the W-2s, that kind of stuff, of course. So hopefully you've got your envelopes if you're mailing them already. But the other big one, which I know plenty of people are already talking about, but it's the 1099s. So if you love 1099s, put a 2 in the chat. If you hate them, put a 1 in the chat. Look at all the 2s, right? No, none of us like them, right? So, so Diamond, can you tell us how 1099s, friends don't let friends waste time on 1099s?
Oh, you remembered. Thank you. Yes. Oh man. And Alicia can back me up on this because she saw the origin story of this passion project. Is hate a passion? Hate's still
Hate
passion.
is a passion, yes.
So my hatred for 1099s combined with my love for accountants, and during the pandemic, when everybody else was doing something very productive with their time, I was diving in a rabbit hole of reportable payment methods for Form 1099-K when I was trying to do just my regular 1099s, right? And I don't have a whole list of 1099s that I do for clients. This was just a very small subset that I was looking up, but I was spending more time than I care to admit to try to find out, is it included? Is it excluded? Why can't I just Google and find one piece of paper that says yes or no, it's included, it's not included, and just give me a clear answer? Because I was going all over the internet trying to figure this out. So, so my pandemic baby was a 1-page PDF that just listed like the top 15 most popular payment services and payment methods that I just put together for myself so I didn't have to look it up again. And then I shared it with Alicia and I shared it with some other folks in the Portland Woodard group, and they were like, oh, this is amazing. I want to share it out with some more people. And I was like, oh, okay, I guess I should put my name on it or something. That's usually what that's what Alicia does. I should do something like that. And then the next year I wrapped it into a fundraiser on Facebook and just let people download it. But each year I was spending all this time trying to gather all the updates and all the new payment services and all the different payment flavors that they were offering. And it just wasn't sustainable, y'all. And so I took a page from all your books and Alicia's book. Great tools come at a cost. So we put together this basically an interactive grid, an interactive search grid to look up more than 50 different payment services and payment methods across, to basically just yes or no, green light, red light, or stop light, go light.
Top light, bottom light, first colorblind, folks. Yeah,
Thank you. Exactly. Because friends don't let friends waste time on 1099s, and certainly not trying to figure out what's reportable. That's one of the dots on the flow chart of how to do 1099s, and it should not take more than a few minutes to figure out which set of train tracks a payment method goes to.
Yeah.
Anybody else? Anybody else feel this level of hatred and frustration over reportable payment methods? Is it just me?
So Ashish, luckily he's on LinkedIn. He put 2 on there saying that he loves 1099s. He's lucky he's on LinkedIn, or I'd call him out on here and he'd have to explain to all of us why he thinks they're so amazing. So, but yeah. I've seen your site and the stuff that you put together. It gets really, really crazy with the different methods. There you go. If you want to show it, the different ways you're making your payments out. If you are paying a certain vendor 2 different ways, and some of it's being reported through a PayPal or a Venmo or something of that randomness, right? The dirtiness there, but then others are check, how confusing it can get, right?
Yeah. Yeah, let's hear it in the chat, y'all. Here's your quiz. Test your knowledge. Right? Which payment methods listed below are always excluded when preparing Form 1099 NEC and miscellaneous?
I know the answer, but it's not fair, so I'm not gonna. Anybody?
Anybody? Just blow up the chat. Let's hear it. Option 1, option 2, option 3, option 4, 1 and 2, 3 and 4, A and B.
Trick question.
All of the above. Nobody knows.
Trick question.
None of the above.
None of the above. Yeah. Whatever your answers are, what are your guesses? Give me your guesses. Your best knowledge on 1099s. Everybody knows if it's credit card, it's excluded. Everybody knows that.
Yeah.
Everybody knows that.
So what's the answer?
Is everybody ready?
We're ready.
Anybody have any comments before I show the answer key? Anyone? Anyone?
Bring it.
Okay, let's see how. The answer is none of the above, friends. Who's surprised?
I am. Yep.
Do you see why I lost my mind and had to put this tool together? Because we all know that all credit cards are excluded, right? No, not necessarily. There are some exceptions, right? In the 1099 instructions, it clearly states if payment is by credit card, debit card, third-party payment, et cetera, but they use the word certain payments. And then at the very last line, it says, see the instructions for Form 1099K for more details. And no one looks at those instructions because they're awful and because we don't prepare Form 1099K. So why would we ever read those? Let alone the IRS code section underneath those instructions that the instructions are based upon. Do not recommend. Do not recommend. So for example, I'll give you an example, y'all. Forwardly is a payment service. Yes? Everybody loves Forwardly. It's amazing. Rapid payments, okay, blows up everybody's mind. Everybody's flocking over for fee-free instant payments, business to business, okay? Is it included on Form 1099? Or is it reportable on Form 1099K because it's a third party? It's not me doing it, it's Forwardly doing it. So it's an electronic payment processor, it's excluded, right? What does everybody think?
I think we know somebody who can probably help tell us.
Jane's the expert here. She's our Forwardly person.
As we get asked about this a lot, I'm not entirely sure. I don't personally know. We've been asked before, do we do 1099s and do we issue them? And we don't. We don't take any of that responsibility ourselves. That's not something that we have added, but we get asked for it a lot. So I wouldn't be surprised if we are required.
Well, I think with yours, one of the big keys to it as well is because you're acting through the new Fed system to help transfer money from account to account. So you're not the processor is the key difference there, right? So you're not a merchant processor.
Correct.
is
Yes,
my
we're
thought
not. We're
processor.
just the we're the race car on top of the engine.
Oh, I like that. Okay.
Yeah.
Okay, I like that. That makes good sense.
So our typical dance then when we're doing these 1099s, if we're curious whether or not we need to exclude or include, we might seek out a representative like Jane from Forwardly and say, hey, should we include this or not include this? And then we hear the answer, I don't know, go fish. And that's the experience across myriad payment services, right?
Yeah.
So isn't it nice that someone has already scraped their brain across the asphalt doing all that work to put together a list for you that you can just keyword search and not have to worry about it?
So now I know also you're just on QB Power Hour and talking about some of this stuff with Rich Kane as well. And there was a whole list of different key codes you can put into QuickBooks into like the check number that will help the software recognize it shouldn't be counted into that whole list. I unfortunately don't know that list off the top of my head and just kind of brought this up right now. Alicia, I thought you might have it, right?
Yeah, let me see if I can pull it up.
That'd be awesome, of course.
Alicia has it. If it's QuickBooks Online related, Spot, Alicia's on it.
So what we're talking about here as that's being pulled up is QuickBooks Online. You know, how does, if you're making payments through these different platforms, how does your accounting software know what it should be like calculating or not? How does it know when to exclude certain things? Since the accounting is handled on, you know, again, specifically QuickBooks. So there's a certain list of things you can write, like ACH, you can do MC for MasterCard, there's Amex, there's a whole list of different codes you put into the check number for the transaction instead, and that tells the software not to add that up. And that becomes important because if, depending on how you're filing those 1099s, the numbers are still going to be coming from your main accounting platform. So you have to make sure the mapping and stuff is correct. And if you really want it to get super crazy, and I'm going to copy and paste this into the different platforms as well, or social places as well, is how do you know if you're paying people multiple methods, what should be reported? Because remember, the $600 amount is the cumulative amount. And if you only paid $400 via check one way, and then you paid another $500 or whatever through one of these other platforms, you still are over the 600 threshold, and now you need to know what to report so you're not double reporting income. Am I saying that correctly, Diamond? Is that right?
Will you repeat that last part, Spot?
Am I saying that correctly, Diamond?
No. The question, my sweet friend.
Okay. Yeah.
The $600 threshold that hasn't changed since the dawn of time. What about it?
Just the fact that if you're paying people different methods throughout the year, then the question becomes, how do you know if you pay over the 600 and 300 was through check and 400 was through Zelle or something of that nature, you're still over the 600, which means they're supposed to get the 1099, but you would have to know what portion you're supposed to do a 1099 for, and you can do dual 1099s from the same company, I believe. If I'm saying this right. And Alicia's saying it's not the...
I mean, like, I saw a question earlier, like Gusto had filed a 1099 for the contractor payments that went through Gusto. How do we attach the contractor payments that weren't run through Gusto? Is that what you mean?
Yeah.
Okay, so you can issue a 1099 to that contractor for the part of the reportable payment methods that went outside of Gusto. And that's fine. It's fine for a single contractor to receive 2 1099s from the same company. As long as you're not checking the box that says corrected, because then that's overwriting the first one instead of supplementing.
Okay.
Do you agree with that one, Alicia? Aunt Alicia?
Which part of it?
You can do 2 separate 1099s as long as you don't do the corrected box and they're supplemented together instead of overwritten.
Okay. And I'm trying to space out the list because, of course, when you copy and paste it, it doesn't like to do it the right way on the social stuff, but that's okay.
The year-end cleanup class that Alicia dropped in the chat, the link for that one is so comprehensive and comes with all sorts of reference materials, including the list that she dropped in the chat for the reference number field.
That's actually in the 1099s class.
Oh, my bad. Okay. Well, get them both, y'all. Just order them both. Collect them all.
MasterCard. Okay, perfect.
And then as far as like, if you have one contractor that you have paid through various payment methods, and some of them are reportable and some of them are not, right? If the amount of payments that went through reportable channels exceeds $600, then you do a 1099. If the reportable payment method amount is less than 600, then you don't have to report.
Okay. Well, we very quickly got to our 2 o'clock time with a whole bunch of stuff. So I guess my big question is, did everybody learn something today or get some bit of advice on how to help you close out the books for your clients faster? If you did, put a 1 in the chat or raise your hand and shake it around and do something. So lots of ones there, people as well on social media. So Diamond, thank you very much. If you want to put a link again, just real quickly in the chat for your website for 1099problems.io, would love to be able to share that across. And then, of course, want to say thank you again, Jane and Fordley, for sponsoring this as you have. Truly, truly appreciate it. We've got next month, we're going to have Heather Day Satterley on, as well as Rich Kane. And we're going to be talking about giving back into the accounting community. So in other words, ways that you can contribute into the community, you can donate, you can the accounting cornerstone, stuff of that nature. We're going to be discussing how you can take your part of that to help build up the next generation and keep this a great industry for all of us. So Richard, any last words from you, my friend?
Hey, I wanted to say it's snowing in North Carolina. First time in 3 years.
Love it.
Wow.
Beautiful. On that note, I think I can't top the snow. So everybody have a wonderful rest of your week. And
thank you, Richard. Thank you, Matt, or thank you, Spot. Thank you, Jane. Thanks, Alicia.
Thanks, Diamond. Thanks, Alicia.
Thank you all for having me.
It was lovely.